Hello, manufacturing leaders! As the end of 2024 quickly approaches, it's the perfect time to review your eligible tax incentives for capital equipment. In the next 2 minutes, I'll explain how Section 179 of the IRS tax code can significantly reduce your tax burden when purchasing CNC machine tools, automation, and other equipment. Section 179 is designed to encourage businesses to invest in themselves. By taking advantage of this tax code, you can reinvest savings into other areas of your business, fostering growth and innovation. Imagine the impact on your bottom line when you can write off the entire cost of new machinery in the year of purchase, as long as it's in service prior to December 31st, 2024. This deduction can lead to substantial tax savings, enhancing your cash flow. Before I review an example of savings, it's important to note that I am not a qualified tax advisor. This example shouldn't be interpreted as either a legal opinion or a tax advisory. You should always consult with your accountant prior to making any purchase based on tax consequences. Now, let's say the chosen new Okuma and Tsugami machines with standard automation cost $450,000. The Section 179 deduction is $450,000. Assuming a 32% federal tax bracket, the total savings is $144,000. And your equipment cost of the new Okuma and Tsugami machines with standard automation has been reduced to $360,000. The time to act is now. Morris has Tsugami B0205 and M08SY machines and Okuma Genos L250, L3000, M460, M560, MB4000, and MB5000 available for immediate delivery. Financing options are available through Machinery Finance Resources. Click the links to the right to request contact, fast-track a finance application, or calculate your own individual deduction. Let's work together to ensure you're making the most of your investments and securing a prosperous future.